Hello and welcome to Buy Africa, the show where we focus on investment opportunities around the continent. I'm Tsepo Modiba. Thanks for joining me. Tonight, I'm joined by Ronak Gopaldas, Africa macro strategist at Rand Merchant Bank. Ronak, thank you for joining us. We're going to chat about my favorite subject, geopolitics. Let's start with a big picture. Where are we globally? What are the themes that I guess the continent and the entire world is exposed to right now?
Thanks, Tsepo. I was here a few months ago, and it was just after President Trump had been inaugurated,
Yep.
and we were trying to make sense of this changing geopolitical landscape. And now, a few months later, here we are. Trump and his theatrics are continuing. Lots of controversy. Seemingly, the US has a foreign policy that's centered around Saudi Arabia and Russia.
Yep.
He's pulled out of the Paris Accord, and Chancellor Angela Merkel has said that Europe can no longer rely on the UK and the US. So that's created a lot of issues. Now, on the European side of things, the Brexit contagion that people feared would happen, luckily there's been some reprieve on that front. Good elections in the Netherlands and in France, but not out of the woods yet because there are deep divisions and structural problems in Europe. And we're going to be watching Italy to see whether this populist and nationalist genie is out of the bottle or whether they're managing to deal with it.
And of course, we've got elections coming up in the UK.
Exactly.
Don't really know. A couple of weeks ago, I could say almost definitively how it was going to go. That picture seems to have changed a little bit right now.
Yeah, I mean, the polls, there seems to be some momentum for Jeremy Corbyn and Labour, but, tactically, I think Theresa May called the election because the Tories felt that they could get a very good majority, and I think that's probably still base case in my mind.
Okay. So given where the US is, given Trump politics, and given where Europe is currently, what does that mean for I guess geopolitical strength around the world? Who's likely to take up a vacuum if there is one?
So yeah, I mean, the big question mark is the liberal global order that's existed since the end of World War II. Is that going to remain or is it going to crumble? And that's why Chancellor Merkel's comments are significant. Now, China, we know, is the champion of globalization these days, less protectionism, more free market kind of stuff.
This sounds very weird, right?
Yeah. But then also you need to look at Asia and the big three as a whole. So India, China, and Japan, I think, are going to be significant players going forward. Japan is experiencing what in a Japanese context is a boom. So largest growth rate since 2006. In a country that's been plagued by weak and fragmented coalition politics, Shinzo Abe with Abenomics has been there for quite a while, and he looks set to continue for quite a while. In India, Narendra Modi, big on a reform agenda. He's won some very crucial local government elections, which means he's all but a shoo-in for 2019. So these kind of strong, stable leadership constructs in these countries sets the tone for an ambitious reform agenda and probably a more assertive Asia on a global stage in my mind.
Right. And I guess the important thing about those three markets is you're talking about three huge markets, both from a population perspective, but also size of economy. Is that a key determinant of I guess, geopolitical power, economic growth?
Yeah, so I think absolutely. You've got economic muscle, flex it, right? So, and I think this is an important discussion in the context of Africa. So we'll know there are a few things that have happened. Trump issued an executive order revoking the TPP. So there's a lot of Asian money. Where's it going to go now? Right. Potential opportunity for Africa to take advantage of this. Right. Secondly, all of these big three countries that I've mentioned have had summits in relation to Africa. So we had the India-Africa Forum Summit in New Delhi in late 2015. India pledged $10 billion in support of Africa. In December 2015, we had FOCAC, where the Chinese pledged $60 billion. And last year in Nairobi, we had the TCAD summit, which was the Japanese summit, in which they pledged $30 billion for Africa, 10 of which was centered around infrastructure. So the rhetoric is there, the intent is there, now it needs to translate into tangible action. And within this context, we need to examine the various strategies that each of these powers is adopting towards Africa. So China's got the One Belt, One Road strategy, which is designed to kind of build infrastructure in order to replicate the old Silk Road and create greater economic and trade linkages.
Infrastructure where? Infrastructure in China, infrastructure on the continent?
Well, from China all across Europe and into Africa. So in an African context, they've built railways from Djibouti to Addis Ababa, Nairobi to Mombasa, that kind of thing. And the idea is really that if the ability to trade intra-regionally, the cost and the ease of doing business in Africa is easier, and we've got a direct kind of trade route, it's a greater market for China to export its goods and for us to exert soft power.
Right. Now, so the important thing before before you continue is, does that mean that China, actually across all three markets, the relationship with the continent isn't just a commodity story? Are they looking at Africa as something more than just a means of extracting resources?
Yeah, so I think this was a central discussion at the FOCAC summit. The relationship needs to evolve. Right. Because typically the China relationship in Africa, the criticism has been that it's cash for resources and it's cash for projects. So yes, it's big, the scale, it's state-led primarily, but now it needs to be something more inclusive given the demographic challenges, the challenges of poverty and inclusive growth that we're facing. Now, and this is where the India, Japan, Africa trilateral agreement becomes quite significant, because the argument from India and Japan, and this was highlighted extensively at the African Development Bank summit a couple of weeks ago in Gujarat, was that their model is more inclusive. So instead of the trade linkages centering around land, this is going to create an Indo-Pacific maritime corridor to create greater linkages between India, Japan, and Africa, which will be mutually beneficial. Now, the argument is that India has extensive experience in doing business in Africa. Japan has the infrastructure know-how, so really complementary. And if you look at it from a competitive landscape in Asia, counteracting the Chinese influence, because they all want to be dominant players in that space.
So, I guess taking those themes into consideration, who on the continent is positioning themselves well to take advantage of this, and who's lagging behind?
So like I said, the economic diplomacy story is one that I think African countries need to be very pragmatic about. It's not just the big three, to be honest. So you've got South Korea, company like Samsung through the private sector. You know, mobile phones, Samsung have a remarkable impact on the continent. Islamic finance, country like Malaysia or some of the Gulf countries could be quite relevant. Singapore, with its focus on trade and energy diplomacy, can also play a major role. So Kenya is the one country that really does this well. But amidst this changing landscape and the fact that our traditional partners are looking inwards in Europe and the US, understanding that there is appetite for Africa amongst our Asian counterparts, and how to use that in a way that is mutually beneficial is something that should feature on policymakers' agendas.
I guess an important question that I guess this Asia story highlights is, how do you take the African continent and replicate what Asia has done successfully? What can we learn from them? What can we implement as a continent?
So about 30 years ago, Asia was not industrialized, and they moved into, from largely agrarian, rural economies up the value chain into sophisticated industrialized economies. Now, everybody says we should look at the East Asian tiger model, but the difficulty is that was largely done in the absence of democratic constructs. So is democracy compatible with development? That's a big debate that's going on at the moment. And the countries in Africa that are achieving inclusive growth, Rwanda, Ethiopia, the question marks around how democratic they are. So from that perspective, they had sound leadership. They had effective leadership. They had vision. And they delivered for their people. So definitely lessons to take out of their book in that regard. But I think the context in Africa, how we want to do this and whether we want to do this in a democratic way is going to present more challenges.
Right. That's a controversial and interesting point. And I guess the framework then is that if you have a democracy, you're probably thinking in 4-year or 5-year stints as opposed to thinking through a 20-year strategy that we've seen throughout Asia.
Yeah, exactly. But you know, Africa is going to become a chessboard again in terms of a geopolitical play. Because it's simply too big to ignore longer term. We know that we're going to play a significant role in global production, global consumption. We know that we have resources. We know that we have demographics in our favor. So I think from a foreign power perspective, investing on the continent now so that you reap the benefits later on is going to be important. And how this plays out longer term is something that both Africa and Asia will need to figure out.
The inter-African trade story and inter-African relations, how does that then either inhibit or facilitate this relationship with the East?
So this is where, through these strategies around the Asia-Africa growth corridor, that's the Japan-India strategy, as well as the China One Belt One Road strategy. If our biggest challenge in Africa, in my mind, is infrastructure. We've got a $100 billion deficit in infrastructure. The cost of doing business and the ease of doing business is very difficult. So if we are able to partner with countries who are going to help us reduce both of those elements, it's going to mean that we can integrate more regionally. Inter-regional trade is 12% or something shocking like that. So, and with the landscape changing geopolitically, it wouldn't be a bad thing for Africa to look inward, to expand its market size and to trade with each other, because the external environment presents a number of challenges.
Perfect, let's leave it there. Thanks to my guest, Ronak Gopaldus, Africa macro strategist at Rand Merchant Bank. That's all from Buy Africa this week. Remember to follow me on Twitter, that's @Modiba_Tsepo, and send us your thoughts about the show using the hashtag BuyAfrica. For myself and the team,